All right, in today's video, I want to take a look at some long-term moving averages. This is one of the things I tend to look at at least every weekend. Um, all markets eventually regress back to the mean, and when I see a market that's just stretched too far above the long-term moving average, it usually means one of two things. The market either needs to pull back into an intermediate degree correction. Of course, this depends on how late it is in the timing band for the intermediate cycle. And we're looking at the gold chart here, and it is getting late. We're on week 22, I believe, right here. Uh, and you can see we've got a problem here in that price has just gotten stretched um, and obscenely far above this long-term 200-week moving average. So one of two things has to happen, I think. Because it's so late in the intermediate cycle, it's probably unrealistic to expect price to just keep going higher. We're now in the timing band where we need to begin moving down into an intermediate cycle low. And this is what happens when you get a really powerful rally like this. Traders just eventually they just um, begin to expect that price can only go higher, and they never bother to look at a long-term chart with some long-term moving averages. And when you do, you get a chart like this where price is just way too far above the long-term moving averages. So one of two things has to happen. As I said, we either need to correct and move back towards this moving average and shrink some of this space between price and the 200-week moving average, or we got to go sideways for a while and allow the moving average some time to catch up. That's what happened right here back in April and May. We had that 2 month period where price just chopped sideways. That frustrated everybody. I warned people this was going to happen. It was going to be frustrating. People were going to give up, and then they would miss the move. And that's exactly what happened. I watched traders get frustrated. Gold wasn't moving fast enough for them. They wanted it to move now, and some people canceled their subscriptions. And then, of course, what happens is finally we break out of that consolidation, and then we get that period of very easy trading where you can make a lot of money quick. And and they made the classic mistake that most of these amateur traders make is they just don't have the patience to hang on and wait for the move to happen. So we've got to have one or the other. I think we're too far above the moving average. I think it's too late in the intermediate cycle. I think it's unrealistic to expect gold to just keep going up and up. So we've either got to correct, and a potential target for a correction would be back down into this consolidation zone here, or we're going to have another one of these frustrating sideways churns that just goes nowhere for um, many weeks, maybe even 2 or 3 months, probably past the elections. Uh, I'm I'm leaning more towards a correction that takes price back down to this consolidation um, than I am to a sideways churn. But a sideways churn is also possible. But I think it's unrealistic to expect gold to just keep blasting off higher and stretching further and further away from this long-term moving average. I think it's too soon to start the bubble phase. The 3-year cycle low in the dollar is not due until probably summer or fall of next year. That would be when I would expect that bubble phase to begin, and that's or to end anyway. But that would be where I would look for price to just keep going higher and higher and stretching further and further above these long-term moving averages. I think it's probably still a little too early to start that kind of move where buyers just ignore uh, the stretched nature of the market, and it just keeps going up in a bubble. I'm expecting that to happen next year, not this year. So at this point, one or the other. Um, Either we got to come back down, probably test this consolidation zone, or we're going to have many weeks of just churning sideways and frustrating people, knocking them off the bull market, and then they'll be have given up and sold their positions when the next move begins, just like so many people did right here.